Global markets plunging as Japan sees its worst day since 1987. We have full analysis here on NTD Business Matters. And good afternoon. Thanks for joining me here. I'm Paul Graney. Great to see you. Red down Wall Street today. All three major indexes ending deep in the red. The Dow falling over 1,000 points today, 2.6%. S&P down 170 points, 3.2%. And the Nasdaq, the big loser of the day here, down nearly 580 points, 3.4%. Intel, Nvidia, Apple all down between 4 and 6%. And it wasn't just the United States. Japan's Nikkei closing over 12% lower today, its worst day since 1987. That's when Black Monday hit Wall Street. Fear gauges showing us investors highly fearful, markets highly volatile. The VIX hitting its highest levels since lockdowns were announced in 2020. And joining us live now is Jim Urio, Managing Director at TJM Institutional Services. Jim, can you hear me?
Yeah, I can hear you fine. How are you, Paul?
Jim, good to see you. Jim, the early afternoon, it looked like markets were about to maybe turn around for us, but things went south again. What are you seeing out there?
Okay, so this morning was interesting. So let's go through the anatomy of this whole, which takes us back to July 11th when we saw the first CPI print that showed, much lower than expected inflation. And then what happened was the rotation from tech, particularly the big tech names, into the Russell. Okay. Now, on balance, it seems to the outside world that should be fine, or we're rotating money from one sector to another. But the markets don't really like disruptive trades like that. So that we traded weak for about the last month. Then all of a sudden we get to today, and what happens in Japan, the yen carry trade, and I don't want to get too wonky and try to confuse people a little bit too, but just put it this way, is that for the last, call it, year and a half, 2 years, people have been amassing these trades where they borrow money in higher interest rates in another country. So it's called the yen carry trade. The result of it was a ton of short the yen. Okay, so all of a sudden the Bank of Japan hikes last week, so it starts to push a few people to the exits in that trade. Then all of a sudden everyone rushed to the exit. You can see that in the yen flying high today. What's that have to do with the U.S. stock market? Well, it has a lot. A lot of these people at different trading desks around the world have a lot of these same positions on, and part of that is long big tech, long the Nasdaq, long U.S. stocks in general. So once you start having to cover positions in certain assets, you start to have to cover positions in other assets too, just based on the fact that you're getting a margin call and you need to raise capital to fund some of those losing positions or cover them. So that kind of pushed us today. Now, the thing that amazed me today, and I know I'm rambling a little bit, I'll stop in 1 second, Paul, is that this morning, at our worst levels, the whole world was saying they need to cut interest rates now. It's crazy. All hell was broken loose, which was not really true. Okay, the macroeconomic picture is deteriorating. I believe we're going into a recession, but the stock market movement today was much more about market position than it was reflective of burning timbers falling from the ceiling economically that needed to be addressed right now. Does that make sense to you, Paul?
Yeah, Jim, I think it's an important point you raise because with this yen carry trade, it's a complicated thing. It's a technical thing, but it's so important for what we're seeing at the moment. I did a taped interview with Lance Roberts. We're going to play it in a few minutes here. And he broke it down as well. And he said the same thing. I don't want to go too much into the weeds here, but to be honest with you, this unwinding of the yen carry trade is super important. And let me ask you, Jim, if this is what we're seeing, where is the bottom?
See, I think that historically, when the Fed goes from a tightening cycle to neutral and it's poised to begin its easing cycle, it usually has the same characteristic. And it usually, they wait and say, we don't need to do this yet. And then all of a sudden the stock market flexes its muscles and trades lower. I thought the Nasdaq, and this is from last week, I thought the Nasdaq would bottom at about 18 to 20% lower. I thought the S&P would bottom at about 7 to 9% lower. Now we hit that today. That doesn't mean I'm jumping back in and buy it. It does mean I'm taking off some of my hedges that I had on, but I believe, when you've been doing it as long as I have, and you think of, oh no, the stock market's going down, then you think of 2008, you think of 2001. This is nothing like that. This is not mom and pop leverage and everybody who has borrowed against their house to buy stocks. I don't see that anywhere. I think this is a normal run-of-the-mill correction. I think 10% in the S&Ps, but if it goes to 13 to 14%, fine. I'm not going to buy it on the dip. I'm going to wait till I see a technical pattern to prove some strength. But I think there is very little to worry about as far as, not being able to send the kids to college because all the stock market's going to be down 50% soon.
So, Jim, you touched on it. In this type of environment, how do you either protect yourself or do you see any potential opportunities in it?
Well, you do. You have to look at this point in time. You can't protect yourself anymore on the day that the VIX shoots up to over 50 and then settles back down to around 30. So you have to come to grips with the fact that that door of buying cheap put protection is pretty much closed. So now what people have to do is not panic and start selling the bottoms. Again, I don't give advice as I'm doing. I'm not panicking and selling the bottom, but I'm looking to see where some stability is and then try to pick up cheap assets. And I think that's the way you have to look at it. Anytime there's a decent pullback, it usually means that there's going to be some good thrown out with the bad. Like, let's take, for instance, gold. Why on God's green earth would gold be hit today at the same time all these other things are happening? And then it has to go back to my first thing saying is that at these trading desks that have to raise cash somewhere to cover losses and other things and to sell things to meet margin calls, that they're selling gold. It's kind of a modern day throw the baby out with the bathwater metaphor. And I think that there are decent assets that are getting thrown out today that when the dust settles will be good places for me to be.
Jim, 30 seconds. What does the Fed do from here?
The Fed is going to ease rates. They're probably going to ease 50 in September. I'm sure this morning they were laughing when people were coming out saying they need to ease 100 basis points right now. No, people, you're panicking because you're losing money today. That doesn't mean the Fed has to panic, and that doesn't mean everybody's losing their jobs today. I think the Fed is going to move 50 in September, and I think they're going to plan on moving 50 more in December for 100 for the year. Right. I think it's not because they're even panicked yet. I think they just think that rates are above the neutral rate, the mythical neutral rate, whatever that may be. Rates are above it right now, and I think they have room to move them lower and not be accommodative, if that makes sense.
Jim Urio, TJM Institutional Services. Jim, as always, thank you.
Thank you, Paul.
And crypto had an even worse time today. Hundreds of thousands of traders liquidated. We spoke to some who told us that some investors have lost everything. Here's the story.
Bitcoin nosedived Monday morning, going as low as $50,000, wiping out billions.
It's never pleasant to deal with a situation like this, but if you've been involved with crypto or Bitcoin specifically for any period of time, then you've seen this show before.
Investor Peter Eberle has substantial investments in Bitcoin. His management firm, Castle Funds, runs 3 different crypto-related investment funds. He says volatility is, unfortunately, part of being in this space.
Certainly in the short term, there's some pain, but we're still very bullish long term in this space.
Our guests tell us some investors lost everything. Over 275,000 investors lost $1.1 billion in liquidated assets. These investors used borrowed money to buy their Bitcoins. This is called taking a leveraged position.
With leverage trading, you borrow money from the exchange in order to multiply your gains, but at the same time, you multiply your losses.
Crypto expert Adam Berkshire says when Bitcoin's value drops even a little, it could result in massive losses. The lender commonly shuts down the account. In some countries, investors can borrow money with only 5% as collateral, so the lender will sell that collateral if Bitcoin goes down just 5%.
All of a sudden, you have what are called cascading liquidations, right? So the first group of investors gets sold out. That puts further price pressure. That knocks more investors out.
Leveraged investing is extremely risky, especially when the required collateral is a small percentage of the whole investment. The largest liquidation was $27 million on crypto exchange Huobi. Berkshire himself has a stake in crypto, but none of it in a leveraged position.
I'm a bit used to these downs and ups. And right now is just a typical stage of this cycle of the market. So I don't think that there is something specific to worry about.
Bitcoin had recovered some of its early losses by airtime.
So as we discussed with Jim Urio, all eyes on Japan as its markets open again in a few hours. Earlier, I spoke with Lance Roberts, chief strategist at RIA Advisors. I asked him if the danger of the Japanese yen carry trade unwinding has passed.
This will all depend on whether or not the yen keeps rising at this moment. So the yen's up about 15% over the last couple of weeks. Be assured that Jerome Powell, our Fed chairman, and the finance minister in Japan are on the phone right now talking about ways to stem off this very sharp rise in the yen. But this goes back to something that's been going on for a long time, about the last 20 years, which is this yen carry trade. And just a very simple explanation of this: if I'm a major hedge fund on Wall Street, I can short Japanese bonds. Which basically, when I'm shorting a bond, I'm selling something I don't own. So I get $10 million worth of capital for selling bonds I don't own. But those Japanese bonds have no yield on them. They're zero interest rates. That's effectively the same as shorting the Japanese yen. So I can then take that $10 million, buy U.S. treasuries with it that yield 3 or 4%, capture that yield spread, and then leverage those bonds 10 times. So I take 10 million, turn it into 100 million, and I buy Apple, Google, Nvidia, Microsoft, and S&P stocks and cryptocurrency, even the Japanese Nikkei, which has just recently set an all-new record before this big correction. So unfortunately, the risk comes is that if the Japanese yen appreciates very rapidly, like it did over the last couple of weeks, the Japanese banks go, hey, I'm calling back that loan, so you need to now cover your position. Well, in order to cover those positions, I have to sell all my long positions to cover that short positions. I know it's a bit convoluted and a bit, technical, but that's what's going on. And it's not about recession risk. It's not about, Israel, Iran. It's not about any of these other issues. The reason the market's selling off so sharply on Monday, particularly in risk assets like Apple, Nvidia, cryptocurrencies, Ethereum down 20% this morning at the open, mid-cap, small-cap stocks, which we have warned about that recent rotation of small and mid-caps, there's no fundamentals to support that. That is now completely reversed. That was all that carry trade piling into assets to try to make a return in the markets.
So Lance, I believe somebody said for 15 years the Japanese central bank has had the rates at 0%, and people have been borrowing money. Who wouldn't borrow money at 0%, right? Borrowing money, levering it up, and investing it in American equities or whatever it was. Now that has all changed because the central bank in Japan has raised its interest rate, albeit by a little bit, but they've raised it. And now people need to pay back those loans. They're being told, hey, we want your money. We want paid back. And so we see the yen appreciating a lot as people scramble to buy yen, and then these other assets selling off. But this is a question. I watched your video on YouTube today, and you said this was like an unexpected shock, not like something we knew. Why was it unexpected?
Well, because you never know when those margin calls are going to come. Yen, the price of a currency goes up and down all the time, but the general trend has been lower in the yen relative to the US dollar. When you start to break barriers, then all of a sudden it forces selling. And again, so, this is one of the risks. You asked me the question, which was, is this over yet? And the answer to that is we don't know, because this creates a forced cycle. As I have to sell off assets to repay that margin, then that drives up the yen even more. And so as I sell assets to cover margin, the yen goes up more, which requires me to sell more assets to cover more margin. So it becomes a little bit of a vicious cycle until it exhausts itself. It's too early to say that we're through this. I think but the important thing for investors is not to panic, right? And it's too late to do anything today. This happened. It was unexpected. It happened over the weekend when nobody can do anything about it. And so investors are having to deal with the fallout of that today on Monday. I would expect this market to rally a bit over the next day or two or three as the markets try to recalibrate a bit. But now there's a lot of people trapped into this market that didn't reduce exposure prior to this event, and they're going to be looking for an exit. So anytime the market rallies over the next week or two, we're going to keep getting these bouts of selling in the markets until we work through this process. So expect more volatility, expect more choppiness. And today is not the day to buy equities, but this will likely lead to an opportunity to invest in equities at lower prices at some point over the next few weeks.
Yeah, talking on volatility, we saw the VIX hit, near 2020 levels again today. Lance, always a lot to talk about, but we'll leave it there today. Lance Roberts, Chief Strategist, RI Advisors. Thank you, Lance.
Thank you.
And Berkshire Hathaway has slashed its stake in tech giant Apple by nearly 50%. Berkshire's number of Apple shares dropping to 400 million shares from 790 million. That means it had more than $84 billion worth of Apple shares at the end of the quarter. The sharp sell-off is notable for CEO Warren Buffett, who's known for holding on to stocks for long periods of time. Berkshire Hathaway now has a record amount of cash on hand. Buffett says high stock prices are making him reluctant to invest it at this present moment. And moving on from markets, Hurricane Debbie hitting Florida's Big Bend coast today, causing serious flooding and a dangerous storm surge as it moves north across the state. NTD's Christina Corona provides an update on the storm.
Florida Governor Ron DeSantis declared a state of emergency Monday for 61 counties anticipated to be impacted by the storm. The storm is expected to move through north central Florida and into Georgia and the Carolinas. Sunday and Monday morning, the storm impacted the west coast of Florida, starting in the southwest and continuing up the coast.
This storm has produced and will likely produce significant flooding events from Sarasota, Bradenton area all the way up to northern Florida. We have 3,000 service members from the Florida National Guard that are on standby, and that includes search and rescue, route clearance, distribution, and protection of critical infrastructure.
The maximum sustained winds for Debbie have reached 80 miles an hour, with higher gusts throughout the storm area and leaving more than 300,000 energy customers without power. Florida's Gulf Coast faces severe flooding from heavy rains, with some areas already getting over 10 inches and expecting up to 20 inches more. According to the National Hurricane Center, Hurricane Debbie was downgraded at 11 a.m. to a tropical storm. As of noon Monday, at least 4 deaths have been confirmed due to the storm. Christina Corona, NTD News.
And one of those killed was a 13-year-old boy. High winds knocking a tree onto his mobile home. Another one was a truck driver. Highway Patrol saying early this morning he lost control of his truck, which fell into a canal. And coming up, Google's search dominance challenged by the Department of Justice today. A judge makes a ruling in the massive antitrust lawsuit. And billionaire Elon Musk reviving a lawsuit against ChatGPT maker OpenAI and its CEO Sam Altman. Musk accusing the firm of putting profits before the public good. That and more after the break. Welcome back. The top headline today. Global markets taking a hit. The Dow shedding over 1,000 points today. Nasdaq down almost 4%. Analysts telling us there could be more pain to come. And news just in, Google has lost an antitrust case over its search dominance. A federal judge today ruling Google has violated antitrust law. According to the Department of Justice, Google parent Alphabet paid Apple, Samsung, and others for decades for prime placement of its search engine on smartphones and web browsers. The $26 billion in payments effectively blocked any other competitors from succeeding in the market. This is according to the judge. The DOJ says the default position allowed Google to become the most used search engine in the world. As a result, it made more than $300 billion in annual revenue, mostly from ads. And Elon Musk is taking on ChatGPT again. Court filings show Musk has revived a lawsuit against OpenAI CEO Sam Altman. The suit says that the company betrayed its founding aims by developing artificial intelligence for profit instead of advancing it for the public good. Musk was an early investor in OpenAI when it was founded in 2015. The lawsuit seeks to void OpenAI's license with Microsoft. Microsoft invests billions into the startup for using its large language models. The new lawsuit is the latest attempt by Musk to oppose the AI company. OpenAI and Musk did not immediately respond to requests for comment. And Tyson Foods eating up Wall Street expectations for the third quarter. It's for revenue and profit. It was boosted by a rebound in meat product sales and lower grain costs to feed their animals. Sales fell in 2023. That's despite shoppers buying more at grocery stores amid high prices for eating out. The U.S. meat packers' net sales rising to more than $13 billion in the quarter. The company's largest segment is beef, volume there up 4%. Pork volume also up, while chicken was down in the quarter. And some election news. Vice President Kamala Harris snagging another endorsement. The Hospitality Workers Union, called Unite Here, is backing her for president. This is despite former President Trump's effort to woo restaurant and hotel workers. He promised to make their tips tax-free. The Biden administration has said that tipped workers would be better off with higher minimum wage. On top of the endorsement, the union has committed its members to knock on 3 million doors in swing states for Harris. This includes Pennsylvania, Michigan, Nevada, Arizona, and North Carolina. And a court has ruled that 2 subsidiaries of China's Evergrand's electric vehicle group should enter bankruptcy and be reorganized. Shares for the group plunging to its lowest since mid-May, creditors filing for the proceedings against the real estate developer's new energy vehicle operation last month. This applies to Evergrand's new energy vehicle and Evergrand smart automotive units. The bankruptcy could impact ongoing talks between liquidators and its parent company. Evergrand Group is the world's most indebted property developer. And a thriller and a family film tried to grab the spotlight at theaters this weekend, but did either knock off the reigning champ? Let's take a look at the early estimates for the box office top 5.
Just super jazzed to be here. Where can I put my stuff?
$6.7 million gave Inside Out 2 fifth place and a domestic total of $627 million. Despicable Me 4 passed the $300 million mark domestic with a fourth place weekend worth $11.3 million. M. Night Shyamalan's Trap opened in third place, grossing $15.6 million. Twisters remained in second place. $22.7 million gave it $196 million domestic.
You appear to have soiled yourself while unconscious.
I wasn't unconscious.
Another record-setting weekend for Deadpool and Wolverine. The Marvel movie made $97 million in its sophomore weekend, giving it a 10-day domestic total of $396 million, already the top-grossing R-rated movie of all time domestically.
And that's all the stories we have for you today. Thank you very much for watching. And if you have any feedback for the episode, feel free to let me know. You can email us at business@ntd.com or just leave a message online. I do read them. And don't forget, business matters. Goodbye.